Hey everyone, welcome back to Corporate Decoder, the place where we sift through the financial filings so you don't have to. This time, we're diving into TuanChe Ltd's report, and let me tell you, it's a bit like trying to find a hidden gem in a used car lot. Buckle up because there's a lot to unpack, from complex company structures to some seriously optimistic future plans. TuanChe, at first glance, seems like a car marketplace. But under the hood, it's a Cayman Islands-based holding company that relies on subsidiaries in something called variable interest entities, or VIEs, in mainland China and even Hong Kong. What are VIEs? Think of it as a workaround to operate in sectors where direct foreign investment is restricted. So, instead of directly owning the business, they control it through contracts. That means investors in TuanChe aren't actually buying shares in the Chinese operating companies, but rather in the Cayman Islands holding company. This is a crucial distinction because if Chinese regulators decide this whole structure isn't kosher, things could get messy and the value of your investment could plummet. And with the Chinese government having the power to restrict cash flow, interventions, and impose limitations, even cash sitting in Hong Kong and mainland China might not be so easily accessible for use in the outside world. So what exactly does TuanChe do? Well, they're involved in offline marketing through auto shows, online marketing services for industry customers, and had referral services for commercial banks before ceasing to operate them. Think of the offline marketing solutions as turning car purchases into large-scale events. They get a lot of consumers into one place, making it a valuable marketing opportunity for car companies and dealers. In 2023, TuanChe facilitated sales of nearly 10 billion RMB, that's roughly 1.4 billion US dollars. The company has also facilitated many special promotion events. They're now trying to get into the new energy vehicle or NEV market, which is Chinese for electric vehicles. They have some collaborations with other tech companies to strengthen their capabilities in EV batteries and vehicle model development. But how does money flow in this rather complex organization? Well, the actual business is done by the VIEs and their subsidiaries in mainland China. Then the cash moves around through loans, service fees, and dividends, potentially moving up to the holding company. If TuanChe actually decides to distribute dividends, funds will be transferred through their organization in the manner described, and all shareholders, regardless of where they are located, will be paid in proportion to the shares they hold. But here's the catch, the company intends to reinvest everything back into the business, so don't expect any dividend checks anytime soon. And don't forget the ever-present risk of government intervention in China. Regulations can change rapidly and with little warning. This could force the company to make significant changes to its operations or even hinder its ability to offer securities to investors, leading to a potential drop in value. There's also the Holding Foreign Companies Accountable Act, or HFCA Act, to consider. It's a U.S. law that could ban trading of TuanChe shares if the Public Company Accounting Oversight Board, or PCAOB, can't fully inspect their auditor for a couple of years in a row. Their current auditor is based in Singapore and not on the list of firms the PCAOB can't inspect, so they seem okay for now. One key challenge for TuanChe is that they rely on agreements with automakers and dealers, but these typically don't involve long-term contracts. This means there is no guarantee that those business relationships will continue. The company is diving into the cutthroat NEV market, facing established giants and new, well-funded competitors. Demand for NEVs can also be unpredictable. It all depends on the economic situation and new technology. China's rules are also changing fast, and it is hard to say what new laws will mean for the VIE structure. Moving cash around within the company has its own set of issues, thanks to China's foreign exchange rules. The rules and regulations to which they're subject, including the ways they're enforced, may change rapidly and with little advance notice to them or their shareholders. If the PRC government finds that the agreements that establish the structure for operating some of their operations in mainland China do not comply with PRC regulations relating to the relevant industries, or if these regulations or the interpretation of existing regulations change in the future, they could be forced to relinquish their interests in those operations. And the securities they are registering may decline in value or become worthless if the determinations changes. Or interpretations result in the inability to assert contractual control over the assets of your PRC subsidiaries or the VIEs that conduct all or substantially all of your operations. PRC laws and regulations governing our current business operations are sometimes vague and uncertain. The accounting firm has expressed doubts about the company's ability to continue as a going concern in the future. Also, the company has a dual-class share structure. A few people have the most voting power, so regular shareholders and ADS holders won't have as much influence. Finally, uncertainty involving certain proposed transactions that they have announced from time to time may adversely affect their business and the market price of the ads. Financially, TuanChe shows a mixed bag as we see all the time in corporate decoders. The most recent years presented show some loss from operations and negative cash flow from operations. They are hoping for increased staff efficiency and potential financing to make things better, although these plans may not come to fruition. The legal and operational structure of TuanChe appears to be high risk and high reward, with significant upside in the Chinese economy if management can navigate the landscape, but potential for rug pull if legal loopholes and interpretations change around them. That's all for this episode. Hit subscribe for more corporate deep dives and let us know in the comments what company we should decode next. Thanks for watching.